Tesla founder and CEO Elon Musk once again testing the limits, this time with his paycheck. The Tesla board is pitching a massive $1 trillion compensation plan for Musk and a 12% stake in the company. There is a big if he only gets that, if Tesla hits the market value target of $8.6 trillion over the next 10 years. For those playing along, currently, the market value of Tesla is at $1.1 trillion. The payday proposal would cement, if it becomes reality, Tesla's reliance on its CEO, who's already the world's richest man. As the EV giant navigates through all kinds of roadblocks, like European sales falling off a cliff and intense competition from China, the blockbuster pay envelope puts Musk in a different galaxy entirely than his peers. So we decided to look into this. Now, take a look. General Electric's Larry Culp took home $89 million in fiscal year 2024. Apple's Tim Cook got a $74.6 million paycheck. Mark Benioff of Salesforce made $55 million. This is interesting. Jensen Huang, who helms NVIDIA, actually the world's most valuable company at $4+ trillion, took in only $50 million. Jensen, get on your board. Mary Barra, auto company, who leads auto giant General Motors, she makes $30 million. And this one, Alex Karp of Palantir, actually comes the closest to Musk. Technically, he raked in $6.8 billion, thanks to the original stock in the company that he has ballooning to more than 300%, although on paper his paycheck was a mere $4.6 million. But now, to what you need to know if you are a Tesla shareholder or a would-be investor. Dan Niles, veteran tech trader and founder and CEO of Niles Investment Management, is here. I think a lot of people want to know if this potential pay package, Dan, makes you more inclined or disinclined to, say, buy this stock.
I'm completely neutral to it. It doesn't change my view on it one bit. Elon Musk is probably one of the most driven CEOs in the world. And I doubt that this changes his desire to conquer different areas such as robo-taxis or robots, but it rewards him obviously hugely for that. But, as you said in your preview, there's a lot of technical challenges that they have to climb before he gets anywhere close to making that. And going from 1.2 trillion in market cap to 8.6 trillion or so to get the full payout, it's not like that's an easy bar to hit.
What would you say the odds are of something like that?
With any normal person, I would say close to zero. With Elon Musk, who knows? He's hit targets that nobody would have ever imagined possible. But I want to be very clear on this. With the stock trading at over 250 times PE, with them having negative EV shipments last year while the entire industry grew 25%, with the EV tax credits going way later this year and regulatory emissions credits, and the industry having brutal price competition, especially from the Chinese, Tesla's not a name that I'm positively disposed on.
Would you say if somebody owned it, they should just hold it? I'm just trying to get a more sort of specific picture here.
No. How's that for a specific answer?
Very specific. Okay, so you say sell.
Well, everybody has their own ways of looking at stocks, right? Everybody has a portfolio of names. If you want this to be in your ultra high volatility, if you shoot the lights out, sure. But should anyone on the planet have 100% of their net worth tied up in this one stock? From a risk-adjusted basis, I would say the answer is no, because the fundamentals don't support it. The stock, trades about fundamentals over a very long period of time. If you look at the chart on a longer-term basis, you'll see that the stock's down from where it was during the go-go period of 2021. So for the last 3 years, if you owned it from the highs of those levels, you actually lost money where obviously the entire market's gone higher. So valuations never matter until they do. But at 250 times PE, and more importantly, remember, the industry EV shipments went up last year by 25%. Tesla's went down. That's something you need to think about because, yes, we've got all these milestones for robo-taxis and, autonomous robots and full self-driving. But the core of the business that's funding the investments for all the rest of this stuff, which is EVs, it was under pressure last year. It's been under pressure for the last several years. And that's what you need to think about. So the risk reward here, I don't like it.
Okay. All right. Risk reward. You don't like Tesla. What do you like? I mean, we're looking at Broadcom, and I know that the last time we spoke, you were very interested in this company. And boy, has it done really well. Certainly today, it is hitting a new record. It's up 9%, just slightly off the highs of the session. But why specifically Broadcom when there are a lot of chip makers out there?
Well, if you step back big picture, nobody wants to pay the $30,000 to $40,000 per chip to NVIDIA. And so their biggest customers, if you look at them, are also customers of Broadcom. And what they do is, if you look at the big guys, Google, Meta, and ByteDance, which owns TikTok, they all are big customers of Broadcom right now, where they work with the Broadcom engineers to design their own chips so that they can buy less NVIDIA chips. And these are specialized ASICs, so they call. What's happening is those are only 3 of the guys. They've got about another 4 to 5 guys in the pipeline, one of which is OpenAI, which most people think is the one that's coming on this next year. And they're scheduled to do about $10 billion of revenues from this new customer, which we think is OpenAI, in the second half of the fiscal year. For the entire year, I think they're doing under $13 billion. So in the ASIC business. So this is massive ramp. And then you've got other companies in the pipeline as well, it looks, which we think is names like Apple, XAI, and others. So there's other people that could come in after this. And everybody wants to cut costs, right? So Avago has done a great job, and it looks like they're expanding that to other players.
Dan, before we go, you've got a name that isn't that recognizable, but you are very hot on it. Can you give us a couple of seconds on Impinj?
Sure. Impinj, in my mind, could be the best performing semiconductor company over the next 5 to 10 years based on their growth rate, because you're moving from a very narrow market where they get most of their revenues from this segment called apparel, which does about 80 billion units a year. And they've just started pilots moving into the food and drink packaging market with Kroger's, the big grocery store company. That's a 3 trillion unit a year market with a T. And also moving into general merchandise with current customers such as Walmart, which is a 325 billion unit market versus the 80 billion unit market that apparel is. It's got a high short interest. Some of it's related, obviously, to the convert that they have. It's coming off big inventory correction. Stock's down 20% from its highs. I think it's very interesting.
So you wouldn't be buying it at the highs. Ticker symbol PI, Impinj. Good to see you, Dan. Thank you so much for joining us.